Today, I want to talk about how the AMC lawsuit will be very likely thrown out and dismissed next week. I want to explain how Allegheny was very likely funded by short sellers and why they were trying to delay this lawsuit and the reverse split. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, Boss Blunt's tweeted saying breaking news. The AMC court appointed special master has concluded the judge should deny all objections to the settlement and allow the settlement, AMC type conversion and the reverse split to proceed. Next up is the court dates on June 29th and June 30th for the judge to decide whether to allow the settlement or to dismiss the lawsuit in its entirety. As you can see from the special master, it says, as a conclusion, I recommend the court deny the objections to the settlement as set forth herein, aka to allow the settlement to proceed and for the lawsuit to finalise and finish. But what really makes this interesting is, as America tweeted, Allegheny have finally responded with proof of their ownership. 4 months plus of litigation has been bought by a retirement fund that holds 879 AMC shares. Allegheny doesn't hold 879,000 AMC shares or 8.79 million shares or even more, just a measly 879 shares. As Sal tweeted, he said, how on earth is it cost effective for Allegheny to pay 4 months of litigation when they had such little shares? 4 months of straight consistent litigation with those exorbitant legal fees could easily run into the hundreds of thousands if not millions of dollars for this lawsuit. So why have they spent potentially millions of dollars on this lawsuit if they only hold 879 shares? We can see from the Bank of New York Mellon investment document they provided, 879 AMC shares only cost them $11,000 in total, or $19,800 when you combine the cost of APE shares as well. Those shares still have a market value of $5,600, and therefore Allegheny has only taken a $14,000 loss, but insisted on spending hundreds of thousands of dollars, if not millions of dollars, on this AMC lawsuit. When you factor in the 1 for 7 point share settlement they will receive, they're only going to receive an additional settlement of something like an extra $2,000, and it cost them hundreds of thousands, if not millions of dollars in legal fees for this lawsuit. Sal added saying this should be all the evidence that you need to know that somebody really does not want this conversion to happen and they were only here to delay. Clearly these shorts are petrified of the reverse split and conversion and therefore sent Allegheny on this wild goose chase to rack up legal fees and delay the conversion and split. Especially as we know from Crystal Ball's tweet that Allegheny is actually funded by BlackRock. Crystal Ball tweeted saying between July 21st and October 20th of 2022, Allegheny Country Employees Retirement System went through $16 million of cash from BlackRock. We can see here BlackRock transferred $8 million, an extra $4 million and an extra $3.999 million to Allegheny for their day-to-day expenditure. This is obviously really interesting considering BlackRock is being investigated by James O'Keefe, so it wouldn't surprise me exactly what they end up finding. But it clearly shows that Allegheny are working for the short sellers and are paid off, bringing this multi-million-dollar lawsuit over just $19,000 worth of shares. As Tony added, he said it was a BS lawsuit from day one, as most shareholders even hold more AMC shares than Allegheny does. And we've managed to have 4 months of delaying and 4 months of feet dragging over just $19,000 worth of shares. This actually makes me more excited to see what's going to happen after the reverse split and conversion and just how quickly AMC will squeeze thereafter. If these shorts are willing to spend millions and millions of dollars on this lawsuit, clearly it's a massive, massive deal for them. And I think that based on the fact Allegheny barely hold any shares and have clearly just been trying to delay this reverse split and conversion for the last 4 months, it wouldn't surprise me if the lawsuit is thrown out in its entirety. Instead of the judge deciding the settlement is okay and should go ahead, she may just throw out the lawsuit entirely. Especially as with Roger Hamilton's tweet from the other day, these shorts will go to great length against anyone that tries to fight back against short sellers. Over the last few weeks, Roger Hamilton has been silenced by these shorts as his stock has been pushed down even further for attempting to speak out. He tweeted saying, "This is what a media hit piece looks like. The fight by Wes Christian and himself against naked shorts has apparently become the loony conspiracy theory threatening Wall Street, according to Forbes. But obviously in their article there's no mention of recent actions taken by the SEC and Congress against those naked shorts, bringing charges against investment firms that have indeed been naked shorting over the last couple of years. Clearly Forbes is paid off by these short sellers as well, and therefore anyone that tries to speak out against naked shorting ends up in a 4-month delayed lawsuit. I also saw this tweet from G-Man and I thought it was really interesting on how Gabe Plotkin is trying to pay back Michael Jordan. You may remember Michael Jordan lost $500 million that he had invested into Gabe Plotkin's fund back in the January 2021 run-up. And now Michael Jordan will sell his stake in the Charlotte Hornets to Gabe Plotkin of hedge fund Melvin Capital. Gabe Plotkin was a short seller of GameStop and had to be bailed out by his Wall Street buddies. His hedge fund was losing on average of $1 billion per day. Clearly because he lost so much money of Michael Jordan's, he's now effectively being forced to buy out Michael Jordan's stake of the Charlotte Hornets, likely for an additional $500 million compared to what it's actually worth. That way Michael Jordan makes a profit on his sale of his share of the Hornets and makes back his additional $500 million on top of that. It wouldn't surprise me if Gabe Plotkin is going to be forced to raise additional capital for a new hedge fund and then use that money to pay back his Wall Street buddies and all of those short sellers that bailed him out. Because we know the Melvin Capital short position on GameStop and AMC has likely still not been closed out of. Either Gabe Plotkin still holds this position to this very day, or it's been transferred to another one of his short selling buddies. And finally, the Cabesi letter is tweeted saying total short interest in US stocks has just hit $1 trillion, the highest since April of 2020. However, total unrealized losses on these short positions are currently at $100 billion. On Tesla and Nvidia alone, short sellers have lost over $25 billion so far this year. Despite stocks pushing higher, short interest continues to soar, like we can see in meme stocks like AMC and GameStop, and also in big tech stocks like Tesla and Nvidia. But all that's happening is that shorts are losing more and more money on all of these stocks, currently up to $100 billion in losses so far, with total short interest of $1 trillion. That means shorts have already lost 10% of their entire short positions, which may not sound like much, but for an over-leveraged hedge fund, 10% could be nearly all of their capital. For example, if a hedge fund has $100 million in cash, but is using a 10-to-1 leverage ratio and has $1 billion worth of stocks, that 10% loss they've already faced or already seen is their entire $100 million cash position, and that hedge fund is effectively bankrupt. Now we know that Citadel doesn't quite have a 10-to-1 leverage ratio, but we do know they have a 7.5-to-1 leverage ratio. And that means that if Citadel loses an additional 5% on top of what they've already lost, if these total unrealized losses reach $150 billion on their $1 trillion short position, that would make Citadel bankrupt. And therefore, if these shorts continue losing more money on their already overinflated and overleveraged short positions, it wouldn't surprise me if it's not long until we start seeing some giant margin calls. I think it'll be interesting how fast we start seeing margin calls after this lawsuit is either thrown out or the settlement allowed. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.